Hey guys, this is Andrew Keene from KeeneOnTheMarket.com. This is going to be a very complex video. We're going to go over a couple different things. We're going to talk about the S&P on the daily, 5-minute, and weekly, the euro on the daily, 5-minute, and weekly, and then oil on the 5-minute, daily, and weekly. First, I want to talk to you about my webinar. This is going to be on May 29th. We have limited space, so please sign up. It's going to be at 4 o'clock Central Standard Time. It's how to read unusual option activity and option order flow. I've been trading for over 11 years, and I've been trading equity options. This is how I use paper, quote-unquote paper. It's a customer. It could be a retail customer. It could be a big retail customer, a bank, a hedge fund, or a mutual fund. How they trade and how I analyze what they trade. Calls being bought is not always bullish. Puts being bought is not always bearish. And I will show you guys how I use this to make money consistently for the last 11 years. So please sign up to our webinar. If you need any more information, you can email sales@KeeneOnTheMarket.com. So let's start by looking at market profile. I thought today was going to be a very tight day with a very small range. Yesterday was an inside day. Today is an inside day. I was actually trying to sell weekly condors in the SPY, and I didn't get filled on them, and I thought the premium was a little too cheap. So for Monday's date, which is always important, I always want to know the point of control. That is where the most volume trades in the S&P 500 futures. The value area high. This is where sellers put their hands out and said, let them rip. And the value area low. That's where the people came in to scoop them. That's where buyers were. So when buying pressure happened, for Tuesday's trading day, we want to know where buyers came in on Friday. You know, the stock market tends to, like trends, likes magnets, goes to the same level, tests many levels same times. So we had the value area high for Monday. It's going to be at this 1321 level. The point of control is 1318. And the value area low is 1316. Every single day when I pull up the S&P, I put every level in here. I want to look at the value area low. I want to look at the point of control. I want to look at the value area high. This gives me an indication. I'm not necessarily going to buy where the buyers came in on Friday. I'm going to look at price action, price momentum. If buyers come in, let's say we're selling off to 1313. Then we rally back to 1316, and I see buyers coming in. It's a good level because that's where they came in on Friday. This is how I use these levels. They're very important. Market profile, it's called. So let's go to the S&P. And let's first by looking at it on the daily chart. Actually, let's look at the weekly chart. So on the weekly chart, you know, I could probably say we double bottom here. The low at this one, 1287 level. You know, we got within 2.5 points. You could say this is a possible double bottom, but not closing on the high of the week is very, very critical. However, this is the first bullish week we've had in now 4 weeks. So a little bit of buying pressure. Do I think 1290 is the low for the year? We opened up at the beginning of the year. We closed at 1256 on December 31st. On January 1st, we opened up at 1274. So could we test these levels? I think it's possible. If we get to unchanged on the year to 1256, I think there will be massive selling pressure. I am in a sell the rally mode. I'm not in a buy the dips mode. I think we have more pressure to the downside as we're going to look into the Euro charts. The Euro charts is showing us there's going to be more pressure, more uncertainty. Another thing I like to look at is the VIX. The VIX is up almost every single day. On a Thursday and Friday before Memorial Day weekend, we have a tendency to see the VIX trade lower. However, it traded higher today. This is very, very important. This is showing that volatility is here to stay. Now we can look at the daily chart and the S&P. So an inside day, we did make higher highs and higher lows, which is a bullish sign. However, I don't think we're going to get through this 1340 level, which is an important level for next week. So this is a bearish rising wedge. So we're in this wedge right now. A breakout could happen every time, anytime. And when a breakout happens, I like to measure the breakout. I want to see if there's volume that's supporting this breakout. If it breaks out, does it look like there's conviction? Now look at the 5-minute chart. So we opened up this morning at 1319.25. And within the first hour, we got the high of 1322.75, and I say 80% of the time we get the high or the low within the first hour. We got the high within the first hour. Just a lot of overlapping bars. Overlapping bars means neutral paper between buyers and sellers. No conviction either way. Versus a trend like this, these are overlapping. Buyers, sellers, buyers, sellers. We are in such a tight range. Finally, we broke to the downside. We did get a sell signal on our e-signal proprietary software, a sell signal at 1315.75. I would have had to risk to a point above the cloud to about 1320.75. So I would have had to risk 5 points. and I would have actually not have got those 5 points. It sold off to 13.12. I would have got 3.75 points to the downside. So our signal, our proprietary software signal did work again. I did not take this trade because I like to take time and target. This signal came in about 2 o'clock, and I didn't think there was enough time in the day to take the signal. We also, like yesterday, we had a buy signal here. If I took this, I would have had to risk to below the cloud, and that signal worked. So 2 signals in a row working. These are proprietary signals we're working on through eSignal. Now let's look at the euro first. And I'm going to start by looking at the weekly. Every Friday I look at the weekly, then I go to daily, and then I go to the 5-minute. So on the weekly, that's 4 weeks in a row that we're lower. And we're also on the low of, basically, this is the lowest we've been since July 2010. This 126.28 level is very important. We broke that. We're down 110 bips to the downside. If I want to get short the euro right here, I'd leave a stop right above this 126.28. I will be looking to sell the euro on any rally. I could sell the euro through a couple of different products. I could sell euro futures. I could sell calls in the FXE. I could pair it against any other currency pair. I am currently short euro Canadian dollar, and I'm currently short euro sterling. So I think the euro is going to break down. I think you can test down to this 119 level. I'm looking to sell the euro on rallies. Let's look at the daily chart in euro. Very similar thing. So we can count this as 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Of the last 14 days, 10 bearish days, 3 bullish days that are weak, and 1 doji. So closing in on the lows, we are continuing to make lower lows and lower highs. Let's look at the 5-minute chart. I didn't take any trades in the euro today. So we opened up this morning, got the high within the first hour, very similar to the S&P. The 855 bar was the high for 2 straight days. Overlapping bars, nothing to trade here. You know, technically, into the cloud, a blue cloud, which is a sell. We want the dark one, not the lighter one. I could have technically sold here. It wasn't a signal for us, but I could have sold here, or I could have sold here. That would have had me in all day, and I would have made some money. So let's look at a couple unusual options activity, and this is what I look at every single day, and this is what I look at to make trades. So the first one I want to look at is IDIX. And I'm bringing it up on the daily. So paper bought 8,000 of the IDIX July 12.5, 17.5 call spreads to sell July 7.5 puts. Stock was trading 980 at the time, right around here at 980. So I have to look. How does the chart look? Well, the chart looks bullish. Is this open or closing? This is opening. I have a pretty good memory. I know this trade happened yesterday as well. They did this for 35 cents. This customer is saying, I want to get long IDIX. They can do this in 2 ways. They'll get long it at $13, which is much higher, or they'll get long it at $7.50, and they're paying 35 cents. So anywhere between $7.50 and $13 in July, this customer will lose 35 cents if they do not have a stock position. Part of the game, it's like a wonderful game of chess, but you don't know all the pieces. Or, you know, a puzzle where you have to do it when you're blindfolded or something like this. You can get a feel for everything, but you never know a customer's stock position. Could they possibly be doing this against a short stock position? Could any trade be possibly done against a short stock position? I put this trade on, but I bought the July 5 puts. So I wanted some downside risk. I'm going to be watching IDIX to see where it trades. Yesterday, a very similar position, stock sold off. I saw Netflix call spreads being bought before earnings, the 115, 130 call spread. Well, Netflix tanked about $30 on earnings. Did this customer buy these call spreads to short stock and become short, or did they just lose a lot of money? I think that they did it to short stock. So this is what we'll talk about on the webinar on Tuesday. So I'm going to look at IDIX, and if it starts going down, I'm going to look to get out of this trade. So I bought the July 12.5, 17.5 call spread and sold the July 7.5, 5 put spread. I did this for 50 cents. Next one I want to look at, NKTR. Another therapeutic, another biotech stock. A paper bought 4,560. Nov Aug 7 call spreads for 50 cents. This is interesting because it's 40 times usual volume. The stock was trading 693 at the time. So this is very, very interesting to me. This is 40 times usual volume. And this was a trade that I flagged, but I did not take this trade on. I did not know this product that well. I like to trade stocks that I've seen before. Beazer Homes, BZH. Paper sold. The January 2013 4.5 calls, and they got 17.5 cents for this. The stock's only trading $2.64. So in my opinion, I think they're selling these against a long stock position. Stock's $4.50. To get to 450, they could either say, I'm willing to get short Beazer at 450, or, you know what? I'm willing to get long Beazer I want to take in a little bit of premium. This customer is taking in about 6% or 7% of the underlying price and getting long until 2014. One more I want to flag is Sony SNE. I don't like to trade 52 weeks highs or lows. I just don't like to trade them. I never know if puts being bought are being bought against a position or they're pressing it. Are puts being bought against a long position, they're protecting their long position, or is puts being bought to press the short? 52-week high, 52-week lows is not my bread and butter, so I didn't want to take a trade in this. But it's interesting to see a customer buy the OC13 puts for $1.40 when the stock was trading $13.27. I don't trade 52-week highs and lows. So this is Andrew Keene from KeeneOnTheMarket.com. Webinar Tuesday should be great. I can't wait. Tell all your friends. We have a YouTube channel as well. You can follow me on Twitter, Keene on Market. And everybody have a great weekend and Memorial Day.